Good afternoon, everyone. It's Chris from Excel as well as Solstice. You can find us on both websites on X, Instagram, as well as Discord. The YouTube is for the weekly overall market. We trade side market, up market, as well as down market. Remember, this is for educational use. We're not a broker dealer. Use at your own risk. Let's go to the first slide. What I want to cover here is the S&P sectors, which are the 11 sectors in the S&P. You can take a look at those sectors: XLB, XLC, XLE, XLF, XLI, XLK, the technology, consumer products, real estate, utilities, healthcare sector, and so on. But remember, the tech sector and the semiconductor and your composite versus the interest rate bearing account, TLT, and the TBT is the yield on it. The VIX in relationship to the dollar against the technology sector, SMH and SPY. SPY, the E-mini is ES, the Nasdaq QQQ, the ETF is NQ, the IWM small cap is RUT, the Dow Jones Industrial Average is DJI, Bitcoin, BTC, and Ethereum. Remember to check us out on Solstice. Get in contact with us. Let us know what you think, and we're here to help. If you'd like to learn a little bit about using adaptive algorithm and signals, including how to trade the overall market, please get in contact with us. Let's go to the first slide that I have up here. I put the S&P, Nasdaq, the Dow, and as well as the Russell combined, the three on an annual chart. You can see last year's December high in relationship to the January 31st high, as well as the February 2014th to the April low on the 7th. We called the 19 and the 12th reversal. We got this gap. We continued higher. We filled a portion. We filled 100% of this gap. There's another gap here. There's another gap here, and we continued higher. But we are wedging on the combination of the four instruments. You can see we are in a linear regression uptrend channel, and even if I connect those dots, we are in an uptrend on a linear regression uptrend channel. What I want to do is just connect this to show you that it is an open cone, which you have a tighter area in the 18 simple moving average is the green and red. The 5 simple moving average is actually the orange and the burgundy color, and the 50 SMA is down here. We had on Friday a look above, come back to retest, but continued higher. If I use the monkey bars, which I will show you in the S&P as well as the Nasdaq, pay attention to those levels. If there's going to be continuation, we're going to hold the 18, or there's going to be a push higher or not. Remember, these are all the sectors, and I included here the Nasdaq 100, the Mega 7, the Fantastic 7, or the Magnificent 7, and I included Netflix in here. You can see Netflix and nvda were a little bit weaker, as well as Tesla on the reset, and Facebook was weak in relationship to Alphabet, Apple, and Microsoft. Let's go to the first sector in the healthcare sector, XLV. XLV, that's the healthcare sector, and you can see in the healthcare sector, after consolidating for a couple of weeks, we looked down, finished the gap, retested, broke out of this area, and continued higher this week. So I just wanted to show the healthcare sector. Usually when there's a little bit of panic or change in sector rotations, I wanted everybody to take a look at XLV in the health. It's always situation. And if I look at the XLE, the energy sector, you can see it's a little bit back down. It backed off from that, trying to break out, and looked back and came back in. So remember, these are the sectors. I'm going to show you the Fantastic 8 or the Magnificent 7. This is including Netflix here. You can see Netflix is included. We can see we had this push up, consolidate, look back into the consolidation, break up, retest it once, rallied up, and now we are coming back in. I do have an ADX DMI print down around this area, which will, eventually come back and retest. We are testing the 50 SMA, but we got a nice bounce back on Friday in relationship to the overall, those 8 companies. You can see the 18 SMA is above and the 50 is underneath, holding this up. In order to run, you need to see the 18 clear and run above it. If it falls in and loses the 50 SMA, I'll look for the 61 in consolidation, where there's that little tiny gap in here. That's where most volume was built in this area. I would look for the 116 catching up and the support around the 23%, or the 78.6, because you can see the support and resistance. You can see the 38, 50, and 61 coming back down, and the 78% on the Fibonacci's on the Fantastic 8 or the Magnificent 7, including Netflix. You can see PLTR here. I want to show PLTR. Palantir, you can see that it had a look above on Thursday. On Friday, opened up and sold off sharply, lost the 18 SMA. I'm paying attention to F3, which is the 38.2, and the 50 SMA. If there's going to be continuation, it has to reverse back up. If not, I would look for the 61.8 in this consolidation in this area. That was the prior year high. You can see 153.93. If this will act as support in this consolidation here, where you had a lot of volume, gap up after the earning, come back, retest the breakout from these three areas, break up, come back in the consolidation, retest a higher high, higher low, and continue up. And now, if I connect these dots, if I connect the control or the signal alert or a pivot point, you can see where that linear regression channel meets in relationship to that symmetrical triangle looking up and failing. So this is Palantir. Let's take a look at Amazon. I just wanted to show a couple of them separated in relationship to the overall market. You can see Amazon sold off. It's been consolidating in this range. Can't clear the 25 area, 26. So this is very important because the 5 and 18 have a death cross on it, and you got the 116 holding this up. In order to hold, you have to hold the 200 in this consolidation in this area where there was a look above, come back in, break out, come back, retest this area. You can see that professional gap between here and here. You never filled it. If this is going to continue, we can extend this a little bit to the right, edit the oval, and I can go just to the right a little bit more to show where that gap is on the profile. That's Amazon. Let's take a look at right now NYA New York Composite, and I wanted to put the NYA. I wanted to put the New York Composite to show you the annual high from December, the January, February highs, the reset in April, continue higher. We've been grinding up in a tight consolidation area, and you can see I put this linear regression uptrend channel, which is no longer valid. I'm going to activate it, or just to you, so that way it can touch this pivot point or the signal alert from here to here. You can see where that support is. If I zoom in here, you can see that the support is under the 50, between the 50 and the 61.8 fib, and the 38 will catch up with the 38.2. There's going to be continuation. Looks like it is holding the 18 simple moving average. If it touches, looks above, and fails, something to tell, but there is still continuation on an uptrend. Every time it tested the 18, it bounced off. Is there going to be continuation, or this time we're going to fail the 18 and that linear regression uptrend channel on the signal alert or those pivots? So that's NYA. Let's take a look at in the tech sector. You can see the tech sector here. If I am going to zoom in, you can see that every time we test the gaps, they usually fill. We have another gap here, which, I showed this one. There's a tiny little one here. Let's get those ovals. We put them up so everyone can see in between here and here. There's a gap between here in this area here. There's another gap. So we got 1, 2, 3 virgin control gaps. If the tech sector is going to be a little bit weaker, we end up retesting the 18 simple moving average or that channel that will fill the first gap here. If there's going to be continuation, you're going to look for the upside of that linear regression channel to look above or not. But this area here of consolidation on those pivots, this was a shoulder, this was the head, this was the shoulder, was coming in, retested those three bottoms, and turned back and continued higher in a uptrend, zigzag ABC pattern, which I don't use Elliott waves. I look for pivots or reversal value highs and value lows in the profile. Let's go one more. Finish up from the tech sector, and I want to look at semiconductor SMH. And what I wanted to show here, you can see all these gaps I mark. I usually leave them up. We consolidated for a while in this area here, but I do have this professional gap between here and here. We can mark this area here, which you can see, and we can extend it to the right. And we have another one between here and here that wasn't tested in a 5 simple moving average. If this is going to be a sell-off, you're going to pay attention to this gap fills. If it comes halfway through the body, retest this consolidation area and bounces off, or do we end up losing and testing the 18 simple moving average, which will catch up, coming up in this area here. So we are away in the semiconductor from the 18 simple moving average, and I want everyone to pay attention to nvda. I do have a lot of cones on it, as well as Fibonacci's, and you can see every time it tests those areas, it ended up rejecting or breaking up, retesting the area of consolidation, breaking up, retesting this uptrend channel. I do have this uptrend channel from way back. You can see it from 2024 and 7/31/2025, and we tested this area. If there's going to be consolidation and a reset, I'm paying attention to nvda in this small area. I'm going to show this gap. You can see this gap. Look, come back in, look, retest it, break up. We got this gap here. We came back in, but we are holding the 5 SMA on the close on Friday. If there's going to be weakness, I'll look for this gap in the 18 SMA, catch up in the F3 in that linear regression uptrend channel for support in order to continue higher. And if it ends up losing this area, I would look for the most consolidation and the breakout in this area where there's, look above, come back, retest, come back in, test this area, go back up, come back in, test this area and go up. And this time it tested here. This area is going to be a very important area in case NVDA ends up coming back down. Pay attention to Intel. So let's go take a look at the micro ES, and I want to show the micro ES on the S&P 500. You can see after the tariff news, that big drop, the reversal back up. We've been grinding higher and higher and higher, but we are in that uptrend. We have this professional gap after the JPAL announcement. We rallied, we retested, but missed that gap. You can see where it was. That was JPAL's bottom. Rally up, come back down, missed it, continued higher, and we had a look above on Friday, which created an annual high 6,800 round number, mental number, and they sold it off to close right in that area where the Thursday close. You can see the Thursday close was 67.65, and on Friday the close was 67.63, 2 points below the Thursday's candle. So let's take a look at the micro NQ. Micro NQ, and you can see in the micro NQ after that consolidation, the head and shoulder, the rally, we got still this gap. You can see I zoomed it in. We are in that uptrend channel, but we are in a wedge. I'm paying attention to this gap because when we look down on Wednesday, we rallied up to close on the almost on the prior high, annual high. We looked up on Thursday. Friday, we created a new high and sold off. We are touching that linear regression uptrend channel. If there's going to be continuation, I'm paying attention to the backside of this channel. If we're going to end up losing and opening and coming back down, I'm paying attention to the 18 SMA in this area of consolidation first. If we're going to end up losing it, I will look for the gap fill and eventually the 50 SMA. Let's go now do the measured move on those instruments. What I'm going to do is go to a 30-day 6-hour chart. This will show you the overnight range in relationship. It's the gray area. The overnight trading hours are in the US market, the black area. So if I'm going to zoom in here from the Fed announcement, you can see that gap from this candle. We came back, but didn't because of this professional gap. We never came back 100% to fill it. We rallied up, came back, retested half of the high and low of this. We tested almost to 50%, rallied up, cleared the 24,640. This is a very important area of consolidation because when you look up, come back down, look up, come back down, you can see we are in the wedge. We were creating that head and shoulder, eventually rallied up, coming back in, we tested the backside of that downtrend channel that we broke out of. You can see it, and bounced off. If there's going to be continuation, we got to try to break up. If there's going to be continuation to the downside, if things are going to turn south, I'm paying attention to the 18 SMA, this linear regression channel, and the 50 SMA, where there was a little bit of consolidation here, where there was volume in the 50 SMA. If I end up losing F5, I look for the 61.8 and that consolidation at the 24,645. If not, and there's going to be a reversal, I will look for the upside. And what I'm going to do is do the measured move for everyone. We take the weekly high to the weekly low here, which is this week. This was the Friday candle. This is the Sunday open through Friday. And what I would do is extend it to the left. And you can see the dates here from 10-1. I'm going to do 9-1 here. 09, so everybody can see the 30-day range on the charts. So if I zoom down, you can see the consolidation where the breakout was. This is the 100% zero line. And this is minus 100 where the gap is. You can see that 80%, minus 80 to minus 100, coming back to this area and meeting the 116 SMA, which will catch up to this area where there was that gap up, the JPAL announcement, rally, come back, retest 50% and bounce up. This is a very important area first of consolidation to hold in order to continue higher. If there's going to be continuation, we'll look for the upside, and the opposite direction would be the 200, 180 to 200 to the top. So trade what you see. Let's go do the measured move on the S&P, and we'll call it a day. Micro ES. And what I wanted to do is do the same thing here. We're going to zoom in to the right. You can see this once again. The Federal Reserve Board about interest rates decreasing it. We had a quarter. The rally up retest, but didn't fill 100% of the gap. You can see that this gap's still there. Rallied up. We broke through. We looked up on Tuesday, fell back in range, but we closed in that range. On the overnight on Wednesday, Thursday night European zone on Wednesday, we looked down to that short time pivot point signal alert, bounced off, continued. We grinded on Wednesday higher. We created a new high. Tuesday, we looked up, created a new high, fell back in the range of the Wednesday bar. Then on Friday, we looked up and we sold off. So I am paying attention to this consolidation in the pivot. You can see that 66, 57, 58 is very important, and the 50 SMA will catch up with the F3, which is a 38.2, and it would be in this area. So let's do the measured move from high to the low for the week and extend it to the right. You're going to tell me why you don't do more than 1 week. I do the weekly so that way I can get the shorter range. The monthly, we do the prior month range, high and low, in order to know the levels. Edit the property. You can see it says 10-1, and I'm going to extend it to the left, 0-1, 0-9. And that's the monthly measured move where the consolidation is minus 50 is, and that gap fill, which would be between the 50 and the 61.8 and the 78% where the consolidation was before the breakout on that report in JPAL. So I hope this video was very helpful, and you can see the upside, momentum, if there's going to be continuation to the top or vice versa back down. So we're going to trade what we see, not what we think. But last but not least, I will show you the monkey bars on the chart. We can go to style. In the standard, we can go to monkey bars, and these are the monkey bars where it shows you the point of control are in reddish color. The value high are shadowed in gray, and the value low. This is the time spent in 24 hours, where the time spent low is, the time spent is high. And most of the time where it happened, it's in green. We have a virgin time in 24 hours down here. I have another one here. You can see if I take the high and low, the 50% is here, the sentiment. The following day from Wednesday, the high and low, the sentiment was above the 50, time spent was higher. But if I take the Friday's high and low and I measure this by itself on a Fibonacci or a measured move, what I'm going to do, show you the high and low for the day. If I take this high, you can see the high was 6,800 and the low was 67.54.
I can make it as perfect as I can, edit the property. You can see it's 6,800 and 6754. This is very important that I do hold this area. I'm going to push OK to show you where that level is in relationship to those areas. If I'm going to come back, I'm going to pay attention to this consolidation in this area here. If I extend it to the left 3 days back, you can see the extensions where they are, so everyone know where they are. So I'm going to zoom it back to the left just 3-4 days to show you where that level is. This area of consolidation, the 67.43 and 67.54 is very important for me coming back through that area if we're going to fall back in order to continue. And I would pay attention to the lows on Thursday and the Wednesday high and low, the midpoint of it, to see if there's going to be support or continuation lower. If there's going to be reversal on Monday and the trend is up, I would look for the upside. So what I'm going to do is zoom in here just by itself, show you the highs and lows. I'm going to show you where the open is and the close for the charts. Where the box is, this is your open. We rallied all the way up. Then we failed and we closed a little bit underneath. This is the triangle. You can see it here where we close lower. So I want to make sure though that these TPOs, you see here, I got 3 TPOs to the low and we started with one. So the close was here, the open was here. So you can see the numbers where they are. This is the time spent, the value area low on the time spent, and this is the value area low where the most contracts happen. So this is very important if I'm going to clear that 68 area in order to run back in and look into value to the point of control and value area high. If I'm not, then if there's going to be continuation to the downside or not. I hope this video was very helpful. You can go back and put it on the charts. I hope this video was helpful. Make sure to check us out on the website, get in contact with us. We're here to help, and smash the like button, share with your friends.